Okay, good morning, traders. Welcome to this live intraday strategy webinar. Today is Thursday, May 19th. Mike Boutros with you for the final time here on SB Trade Desk. Guys, great to be with you guys. Aurelian, Steve, Theodore, everyone in the room. Happy Thursday morning. And I hope some of you caught those moves over the last couple of days. So we saw, as I noted yesterday, indiscriminate selling across the board. You got the largest loss for the S&P and the Dow since June of 2020, right? That's right into COVID. And then you have also things like Amazon, like Target the last 2 days, which really highlighted the inflationary pressures and the squeeze in the margins that we're seeing, really slammed those markets. I mean, those things saw the largest decline since like 1987 or something. It was insane. So there's been some radical moves. The market is starting to get stretched on the downside now. Remember earlier in the week, the rebound was the focus. We're trying to fade that. Getting stretched a little bit on the downside as the sentiment really turns aggressively bearish. So always want to be cautiously with, I tend to go boldly against, but you want to be a little bit more cautious here. So on the menu for today, to wrap things up, we'll have a look at DXY, Euro, Dollar CAD, Aussie Yen, and then we'll get into the equities, SPX, NDX, DJI, gold, a quick look at what Aussie's doing, and sterling. We noted that set up last week, got a little bit of a bounce early in the week on Sunday. It fizzled. We're kind of still in that weekly range. So we'll take a look at those levels. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. Ted says, I'm in mourning. Don't be in mourning, Ted. I'm not dead. I'm still here, brother. Just so everyone has it on the list, in the box, in the chat box, there's my Twitter handle. There's my profile page on Daily FX. Okay, all new reports. You'll see a lot more reports, by the way, showing up there. All of these setups, guys, I'm going to continue to try to provide for you. So it's a win-win for everyone. And like I said in my last webinar, we are building out a section of Daily FX there, which will host all of this strategy. So I hope to get you guys uninterrupted service, okay? Might not be as organized and as clean as we do it here, but the material will be there. So look forward to great things ahead. I look forward to seeing you guys all in the morning webinars on Monday morning on 8:30 Eastern with the Daily FX Strategy webinar. And like I said, we'll be popping up a second webinar in the week later in the third quarter. So I'll throw that out there. All right, let's get started. Here's what DXY looks like as we kick off the final part of the week here. Basic premise of the trade hasn't changed. Excuse me. The focus was on 104.88. That was the 1999 high. We were looking for some possible exhaustion there on the daily chart. You got that first daily pullback there on Friday. So right into the open of the week, we were looking for the possible exhaustion trade. 103.82 was the 2017 high, and then you're looking at 103 proper, 102.99, but that's a 2016 high close. We're almost there now, right? Here's what the scalp looked like. Well, I'll show you the daily chart first. Okay, daily chart, back to back. So we did get that pullback. Here's that 103.80 level. Here's 103, okay? It comes just below 103.23, which is the monthly open. So you can see here, guys, for the last 3 days, the lows have been governed by the objective monthly open, right? Not Mike Boutros' opinion, not Jamie's opinion, fact. So I'm still looking for a reaction there. Ultimately, if we pivot below 103, I think that's the go ahead. But the basic premise has still just been the exhaustion trade, right? We're coming off of uptrend resistance. The first area of uptrend support is right here. Okay, intraday. This is a pitchfork I was working with this morning. I don't want you guys to stress it just yet, but let me just show you what it looks like without it. Here's what it looked like as we were opening up on Sunday. So, we never even went for another test of the highs. Literally, we opened and it's just been a fail swap drop. Here is the monthly open. Again, here's that 103 level. It's the 2020 high objectively and the 2016 high close. So I'm still gonna wanna see like that give way before you start to get a little bit more comfortable with the downdraft here. Now, interestingly enough, if you work the levels, and there's some poetic license used here on this slope, but it highlights the same regions we've been looking at, right? High day close, weekly open, that's bearish inval, 104.46, drop it from 104, excuse me, 88. Near-term resistance still 103.82. That's still support. If you kick this out, this bottom slope, just to have that 618, maybe into 102, right? You start to see the lower parallel on former slope resistance. There's a lot going on here. But basic premise is, okay, you've made that Monday, Tuesday stretch. Wednesday gave us the range consolidation. If we break here, you're looking for Thursday, Friday low. Okay, I'm cautious about chasing here. And if markets do, you know, find some solace, or we get some sort of reprieve to the sell-off, you know, that might kind of put a pause on this. So I'm not really crazy about it, but work with that slope for now. You have some nice inflection. Right here is resistance. Right here is support. We'll see if this offers any tell as we move forward. Can we get a full screenshot of the daily? And yeah, here's the daily. No change to any of those levels. It's the same pitchfork we've been tracking from last year. That was the breakout, right? So this is the upslope, the dominant slope of this year, all derived from just these two levels. And this is the original slope, parallel, 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 right? Right into the upper parallel, we're checking that slope right now. If you pivot, you risk a bigger dump. But looking for inflection, something here today. Okay, and then here's the weekly. Finally, you know, for the last 3 weeks, we've been talking about the risk for dollar exhaustion. Took a little bit longer than expected, went all the way up into those 1999 highs, but a nice inflection here nonetheless. Okay, next up is Euro. Take a quick look. That was published back here on the 17th. Again, similar scenario. Your Euro was coming to that 2017 low, okay? That was 103.40. Again, a trade that was pretty stretched. This is back from the 17th. Major resistance doesn't come until like 106.37, 106.40s, but we are seeing the top side bounce kind of exhaust here a little bit. Here's what it looks like on the daily chart. Okay. Right into the upper parallel, or right into the 25% line, I should say, the lower parallel right here. And perfect exhaustion there yesterday before pulling back. Look where that pullback, guys, found support right at the 2015 low. Having conviction on your levels, right? This is not only the April low, right? This month's opening range lows, which broke, recovered, but then here's yesterday's slam test lower and bounce. What does that mean? Putting added emphasis here, guys, that we could still see a little bit of a recovery higher. Let me show you. Here's the intraday, and here's what it looked like back on the 17th. Not much has happened since then, right? We did sneak a little higher. We're straddling the monthly open at 105 proper. So I'm not treating this anything more than it is right now. Here's your resistance level near 106 proper. 106.37 is going to be like your breakout zone. That's the 2020 low. Also, the weekly highs for the month, the monthly opening range highs. So that's an objective topside pivot if you clear 106.35. So where does that put us right now, Mike? Well, unfortunately, you're sitting mid-range for the month. So it's not really proper, ideal favored opportunity from the lows or from the highs. If you're holding long positions, bring your stops up to last night's low. If you're long anything short, you know, beyond that. New positioning, we're looking for a reaction up here. We're looking for a reaction up here. Okay. At the end of the day, the weekly opens right down into key support. And I really can't stress, guys, how big of a level this is a support. If Euro, this is the weekly chart again, if Euro breaks this, I mean, you're looking like 101.26. That's just a soft target, the low close from back in 99, right? The 786, you have parity, obviously. The 786, the entire rally from, what was that? The 2000s. Is like 99. So this is very risky. We've already broken the lows from 2020. We have not broken those multi-year lows from 2017, and we're there right now. So if this buckles, like I said, there's a lot of room, right? There's a lot of room. Not only that, the fact that I always tell you this this tidbit of a break of downtrend support, oftentimes the sharpest part of the drop. So we're at a pivot zone. Excuse me, I love the inflection that we're getting. This is well-defined region. Anything southbound of 103.52 is terminal, right? And one more measured move off the low, even if this is just going to be a corrective move, the 100, I showed you this, I think, last couple days ago on Tuesday, 106.70s is where the 100 comes in. So maybe on an intraday stretch even to test that 100 and then pull back. But be careful. Be careful here. Questions on euro? No event risk of note or of merit into the close of the week, so you're sheerly watching price action here. That's number one. And two, I do want to also just touch on the 10-year because it's interesting in that yesterday it didn't end up. This is the 10-2 spread, by the way, just to show you. You know, when we go into negative territory is, you know, when the recession fears start to come into play and people start to freak out again. But in any event, here's the 10-year, right? Yesterday, it was almost, I might need to remove that. I might need to remove that arrow. It was almost an outside daily reversal. The close came in at 288.9. The close came in at, well, 299. It actually, technically, let me put that back. If we stretch it, it is. But I just want to show you guys, outside daily reversal led to that 5-day decline. Outside daily reversal off the highs. Outside daily reversal again. If this is the neckline of some sort of head and shoulders formation, the targeted move is actually much lower. But for me, 2 equal legs off the high, just an initial target. You're looking at 262, initial 271 is a basic 236 of the advance off the lows from last year. It's also the low that we registered right here, which, by the way, attempted to make a pretty mean reversion candle there off that same pivot. So on the way down for yields, and this is why could perpetuate a little bit more of a dollar pullback story, but you're looking at 271, 262. I'd want to see a little bit more of a stronger support bounce there if we get it. Questions? Can I see the fork? This fork, this is the old fork that we broke out of back in March. This was right off the lows. 1, 2, 3. It was actually pretty crazy how this worked out. It gave us the breakout way early on. So that's an ancillary target. You know, I wouldn't put that as something I'm actually looking for right now. The initial focus is on these 2 levels on the downside. Okay, is there a pitchfork associated with the imminent decline here? I don't know if this will yield much. Possibly could be a pitchfork in play here off the highs. I don't want to put too much emphasis on it, but keep an eye on that. We'll look at this again on Monday. Okay, so that's the 10-year. Quick look there. All right, from the FX pairs of the ones I've been most heavily involved in, it starts with dollar CAD and it pretty much ends with dollar CAD this week. It's one of the ones I've been most focused on. We've been talking about it for a while, so the focus was on this exhaustion into major resistance, 129.75, 130.23. We closed well below that last week. We noted right into the start of the week, you know, the focus was on a drop into uptrend support. Here's what dollar CAD looks like on the daily chart. All right, it's not the sexiest chart, but just wanted to show you some basic stuff. Here's the exhaustion we played last week into uptrend resistance, confluence uptrend resistance, longer term and shorter term. Obviously, we've been talking about the divergence that we saw into the high. Both reference points here were below 70, stronger signal. And we were looking for a drop. You know, the initial target for me was 29.50 and 29. We railed through 29, closed well below it. Here's the drop into key support and uptrend support. Here's the scalp, and here's what it looked like last night. Okay, so the focal range we're talking about, 29 into 28, is still in focus. Here's your weekly open. Let me get this into the 120-minute for consistency here. Here's your weekly open. We rallied right into, again, 2019 open, failure, broke. Here's uptrend support. Here's a 38.2 retracement, and here's 2 equal legs off the high. So this is a very critical support for the near term right here on dollar CAD today, 27.94 into 28.19. If you break below that, the next major level is down here, 26.40 to 26.76. Absolutely critical. What's there? A whole bunch of objective stuff. The initial April monthly opening range highs, which broke. The 618 retracement of the entire advance off the April low, again, fact. The objective yearly open, don't take my word for it, here's the pivot. So this is a very clear-cut level. If we pivot and close below this level, I'm looking for a drop towards 2660. I'm currently not positioned in this, so I'm looking for the inflection, right? It's either a break, we'll try to get a pop higher against 2820 for the move lower. If this rallies into the US Open, you're still focused on this key range break. If we pivot higher, that's your bearish inval now, okay? So clear-cut levels here on dollar CAD moving into the end of the week. Questions on Loonie? Number 4. All right. Man, I wish I had a little bit left on that one. Okay, we'll see if we can't get back into this one. So Aussie yen was an interesting setup into the close of last week, and I've just been kind of tracking the whole move as it pans through the levels. So, last night, I just wanted to give you an update. We failed right ahead of the 100% extension, right ahead of the May open. The S&P did that as well. The NASDAQ did that as well. The Dow did that as well. All of them on this near-term recovery faltered right ahead of the key levels that we were looking for as far as exhaustion is concerned. Never going to hit it 100% of the time, but the timing was there for the turn. So for Aussie yen, the only thing I just kind of wanted to highlight today is that for all intents and purposes, the weekly opening range is intact. Here's your Monday, Tuesday stretch. For all intents and purposes, you're trading just below the objective weekly open, right? So for me, a break below 88.77, this should track risk rather nicely. If risk is breaking lower, that's the break that will unleash, again, a drop towards 87.26. Again, we just missed that on that last tip there, and the lower parallel. So here's what the daily chart looks like. I want to even take you back further. Why we even started looking at Aussie yen to begin with was because someone in this room asked about it. And on the weekly charts, man, oh man, 786 retracement to the pip. This is from the entire 2013 decline. Talk about multi-year retracement right there. Okay, reversal candle. Next 2 days, we tried to test that level, couldn't get through it. Here's the pullback. So it's not full on bear trend here yet, but certainly the exhaustion off resistance is what the focus has been. On a multi-month stretch, here's what it looks like. And on the intraday, your weekly opening range is preserved. Oh, might need some consulting, like your normal work, hourly, daily, and week stocks, gold, silver, and crude for now. Yeah, Ted, keep the communications open. Feel free to shoot me an email. Guys, you can contact me at any time at michael.boutros@ig.com. That's going to be my email address, or that is my email address, has been for quite some time with Daily Effects. Obviously, you guys can reach out to me on Twitter. I will do my best, guys. I recognize some of you have been with us here for 7, 8 years. I will do my best to address your questions in the webinar on Daily Effects frontmost. Keep in mind, there's sometimes upwards of 150 people in there. The questions just get rapid fired, but I do look for you guys, and I will try to always give you priority, all right? All right, so that's Aussie yen. Not much is going on there. Watch for a break of the weekly opening range. Here is SPX. So futures markets, or ahead of the open, markets are looking lower. Futures markets, rather, ahead of the open. And man, this thing it's getting kind of stretched, but here's what's going on. Let's start from the top down. SPX, here was our last update on SPX from last night, but weekly. 39.24. Do you guys remember when we first eyed this target? Right? We were northbound to 43. I didn't get a lot of love when I put that target out there. It's 2 equal legs off the high. We probed it last week, closed well above. We're probing below it again now. Now there's still a string of levels just lower. I am watching 38.12, 37.34. Last year's open at 37.34, a basic 38.2 of the entire 2020 rally. That's 38.12. So this is the next two levels on the downside. Okay, pretty big stuff. Pretty big stuff. Slope. If we take a parallel of the original slope off the highs, extended off the lows that we made from August and October of last year, is that September? Converges just a little bit lower right here between these levels. So that's the initial focus. Are things super stretched here? Yes. Is that a reason in and of itself to be bullish? No. It is a reason to curb your expectation for the downside. That being said, on a weekly basis, if we close where we are right now, you're still looking for 38.12, you're still looking for 37.34. Okay, because this is the weekly chart. Momentum hasn't broken into oversold on a weekly chart yet. If it does, remember, the break below 30 is in and of itself a signal, right? Doesn't mean the end is done. In fact, the breach above 70 oftentimes is one of the steepest parts of the rally. So when you look at the momentum indicators and you hear people saying, well, we're overbought, we're over, I mean, look at things objectively from a price action standpoint. The condition of overbought or oversold in and of itself is not a bias. It's where we're coming from and the trajectory of the move. So if we break below 30 on a closed basis, you know, I think that would bring up front 37.34 pretty quick. So watch this tomorrow into the close. That's all I got to say about the weekly chart. Daily chart looks like this. Yesterday, my friends, was another outside day reversal off the highs. Okay? Outside day reversal off the highs. Outside day reversal off the highs. Outside day reversal off the highs. So yes, it does point lower. There's that 38.12 on the near-term slope we've been following, which by the way has been pretty darn good. You look at that over the next couple of days, converges right on that 38.12. And I don't have the 2021 yearly open, but let me add that right down there. Okay. Intraday looks like this. And here's what it looked like last night. All right, so the break below, let me turn it around again. Into the start of the week, we were looking at 40.43 and 41.17, 41.37. This was bearish inval, but both of these levels are levels that we said looking for possible exhaustion off one of these two marks, right? It's the kind of the first idea right into the start of the week. So here was the rally, faltered, couldn't even get there. Yesterday, again, those Target earnings on the back of Walmart earnings really took the markets by surprise. I think you saw, you know, I think Target was down like 30% yesterday, which is pretty big. I'm looking at all of these things which have just been getting massacred, right? Here's TGT, right? Gap lower, and I'm jumping all around here, but we're talking about the SPX. So gap lower, right through support, right through the yearly range lows. Here's the 50% retracement. I showed you guys this chart yesterday on Twitter. Resistance somewhere in the range of 170. Break lower from here, you're looking at the lower parallel, but the 618 of the rally, and this is the rally back from 2017, gives you like 132. So what a drop. I mean, we're already what? 41% off the highs. So you're seeing this sort of in a lot of spots. Here's Amazon, again, a break of downtrend support, sharpest part of the rally, drop, still bearish below 24.46. I think you get a drive down lower there as well. So you're seeing this weakness manifest on across, you know, on a lot of different things here. So at the end of the day, you're still looking lower while with this near-term channel. I'm looking for possible downside exhaustion into one of these two levels. That should give way to a possibly larger kind of consolidation level before you get the last washout. You know, I've been hearing a lot of people on financial news publications is the low end. Well, look, here's the VIX. I think I showed you guys this before. You know, are we a little elevated? Yeah, sure. But historically speaking, you know, we need some like major top outs, some major washouts, right? Some major capitulation here before you can get a little bit more conviction that a low is in place, right? We're pretty much range bound all year long. So my humble opinion is that, you know, there's more downside to come. From these levels, with everyone turning kind of bearish where we are, you want to be careful just not to chase, okay? Questions on SPX? No change to any of those levels from last night's update. Okay, NDX, similar type of scenario, okay, turned right ahead of resistance, right ahead of the median line. On this one, we turned even earlier, right? If you guys recall, on NDX, the focus into the start of the week was, look, we just rebounded off of downtrend support. The recovery, we were looking to see what happens into this level. Here's what happened yesterday. We gapped higher, oomph, and then crashed lower. So like your quintessential, you know, resumptive trade. Recall that the NDX, NASDAQ did not complete two equal legs off the high yet. That was 11,520. Remember that? Turned right ahead of it. Turned right ahead of it. So that's still for me pretty darn huge. Pretty darn huge on NDX. And again, just to bring things in perspective, I'm sorry going backwards here. Hey man, great to see you in the room. Hello, I did my best not to miss your last webinar, though I'm sorry to be late. No worries, man. Great to see you. How long is the site up? Ty, so the site's gonna be up. I think we're gonna turn off. So obviously, guys, next week is gonna be basically the final week, right? Because we head into the extended holiday break here into the close of the month. So we'll wrap things up next week. I plan on having the site up for at least one more month, and then we'll have to reassess there, Iman, Ted rather. So all the material should still be up there for a while if you need it. So NDX on the weekly chart, what I want to highlight is this, right? The 11,768 was the 50% retracement. I've removed it on the daily charts just for the sake of keeping the charts nice and tidy, but there's the 100. You know what I mean? And if we work with this slope, this is just a parallel. And if we take it down to the actual swing low here from February, something like this, well, not with all that nonsense, but just with the line like this to that low right here, basically highlights even more so this key region. So watch again for downside exhaustion. I don't know how much deeper we get from that. If that breaks, by the way, just for the if then proposition of trading, 11,520. Beyond that, you're looking at 10,589. Almost another 1,000-point drop. Theodore says, I will always be Ty going forward. Gotcha, Ty. Right on, sir. Cheers, mate. All right, last but not least, and this is for you, Ty, because you've been tracking this one pretty closely. It wasn't my favorite setup, but it's looking pretty decent now, I suppose. Here's the Dow Jones on the weekly chart. Remember the break, the buckle, 32,530. We drove down into it in February, tried it again in March. Couple of weeks ago was the low. Last week was the first weekly close below. This week, it offered resistance. So actually pretty darn clean. This 100%, so two equal legs off the high here, gives you 30,812. And I'm still basically looking for that. Here's what it looks like on the daily chart. Near-term slope. There's a 25% parallel today and tomorrow right here on 3812, excuse me. Resistance, weekly resistance, Not going to change a darn thing. 32,600, 32,530, basically where we closed last week or yesterday, or day before yesterday, excuse me. Bearish inval has to be the monthly open. Has to be the monthly open. So basically 33, 32,978. Next level down is 3,812 and 29,794. Intraday looks like this, right? Here's the 2-hour. Clean cut levels, clean cut levels. Six, 7, and 8. Okay, gold. Well, given everything that's been going on, the gold trade, man, it's been kind of boring. You're seeing a little bit of a rebound here. Look, the two levels we talked about here for a while were 1850 and 1828 to 1818. We closed just below that last week. Here's the last level that we were looking at, the this year's low week close, which is still preserved because that's still the low week. And you're seeing a bit of a rebound here. So you start to think to yourself, what is that? Is that a hold of uptrend support? Because on the line chart, certainly looks like it. And while the weekly close last week did resolve below 1818, we're now in a much more bearish stance on the markets, right? We just had two of the massive, well, one of the largest massive daily declines that we've seen in a while. So if we get inflation running hotter, we get markets sell off harder, you might get the wake up, right, for the gold trade. I just don't see it yet, though. I just don't see it yet. So that's the weekly chart, right? Nothing's changed. I would still want to see a weekly close above 1850 to suggest that a more significant low is registered this week. And maybe that's the justification that we get. But here's what it looks like on the daily. All right. Downtrend support. Do you remember the adjustment we made on this? Downtrend support. Really nice rebound off it. Here's the buckle above 1827 again. This is the first time that we're getting it now here today. So you have a couple of things to look at, right? Every 200-day moving average. You guys know me, I'm not huge on playing moving averages as sort of targets per se, but something to look at on a daily close basis today. Here's your breakout zone. If you get back above 1850, again, level we were looking at, 1853 is a basic 236 of the yearly range. That would put you back above the median line. That would put you back above the lower parallel, former support turned resistance. That's kind of what you would look for. And then we would be a little bit more comfortable playing the long side. But as it stands right here, here's what it looks like on the 2-hour. Here's what it looks like on the 4-hour. And here's our last update on gold. Okay. Weekly opening range preserved right below that key region. If this is a breakout, we're well on our way to 1850. If you take, a more near-term approach on this, 2 equal legs off the high comes in right there as well. So even if this is just a bump correction within the downtrend, we should get a drive into this zone and look for inflection there. A breach higher, all right, you're looking for a larger dollar pullback. In that case, I would think, you get maybe a larger gold bounce. But at the end of the day, this is kind of the focus on today's stretch higher is what we do around that 1853, 1850 level. But the levels are pretty darn good. Questions? Can we do silver and crude today? Yeah, sure. So silver looks like this. I don't really have a near-term sort of setup I've been looking at. Guys, these are the same exact levels I showed you from last week. So look at that breach. What are we sitting on that as support now? For silver, the weekly opening range is preserved still. If we breach higher, I do think you get a little bit of recovery. A basic 38.2 is like 22.91. But this is kind of a major pivot. We need to close above these highs before you start to suggest again that a more important low is in place. And as I said to you yesterday, on its face, it looks like wave 3. So I still think you exhaust and maybe see a new low. But look how this pivot works into the close of the week here. This is going to be pretty big. Silver on the weekly chart, by the way, right? 50 of the entire 2021 drive. So if we're able to recover above these levels on a closed basis, maybe you get the exhaustion, still recovery, but it's not the cleanest setup type. Just my opinion on things. I'll hit crude real quick, and then we'll hit Aussie and sterling and call it a day. Here's crude, because that came off resistance yesterday, and I actually put out a tweet on this. I don't typically tweet too actively on crude, but I think it was worth, I thought it was worth highlighting. The level is 1547 into 1480. Guys, we highlighted this a while ago. This is not something new. This is the 618 of the entire drop from the yearly highs, right? So we've been eyeing that level since April. The 2021 high, right? Fact, not opinion. And we kind of ran into that after the high was registered. We reversed lower. That's the region where we faltered back here in March before cracking lower. So a good zone to look for resistance and the range highs for the multi-week sort of consolidation we're in, right? So you got to drive into it. Worked out pretty good. Slow burner, right? You had almost a doji. Then yesterday finally kind of washed out lower. Monthly open support comes in at 104.32. You're constructive above 100. You got a couple different slopes there depending on how you're kind of looking at this. Nice psychological barrier as well. Waiting for the washout. Yeah, I mean, Ty, I don't know how deep the washout gets. I don't know if you're looking for like 88 or so. I don't think, the story's not getting any better, guys. So, you're going to get pullbacks. You're going to get, drops. You're going to get announcements that we're doing this or that. But at the end of the day, is anything can actually move the needle? I think we're in for higher oil prices, period. Right? There's the top side targets. But near term, yeah, we could be on the pullback here. Here's what it looks like on the intraday chart. Basic channel that we were following since last week. Another reason why yesterday I thought it was prudent to highlight that level. Basic uptrend support. 1 touch, 2 touch, 3 touch confirms the slope. There's a parallel. So all things held constant, this just broke the weekly opening range, which would suggest look for a Thursday, Friday low. A basic retracement for the near-term advance off the lows that we just made for April. Puts a 618 right there at 101.50, just lowers that 100. Look for something there. Look for something there. All right. That is crude and gold, 9 and 10. Okay, Aussie and sterling. Aussie's been sort of a thorn in my side right now because I don't. What's the word I want to say? Do you guys? It's all about 70. It's all about the 70 handle. It has been, and I've been unsure of how to sort of deal with this. So you guys remember I've talked to you about this for months and months and months. 69.90 to 70.14. You've got the 2020 Open yearly lows, former swing lows back in 2018, just loaded up, right? And that was our line in the sand. It was this year's opening range low. We closed below it last week. All right. Well, if this is a legit break, rallies should be capped by that 70 handle, maximum 70.70, which is the close from last week, which was a massive doji that tested the yearly open and closed right off the lows. So I'm looking at that level. It was last week's high. And so that's sort of my line in the sand, 70.70. If we breach above 70.70, I think that a more significant low is in place. I think at that point, we could start to discount this as a near-term false break scenario. Till that does, guys, I'm still on the fence. And below 70, man, you're at risk. So we got to climb back above this and reestablish back above the monthly open. Okay, that's that 70.70 level. If we get through this, that's a break of downtrend support, a 3-point resistance rather, a 3-point resistance. It's the objective monthly open. At that point, we'd be looking for sort of a larger reversal type of play. Till that happens, this could simply be a rebound off downtrend support into downtrend resistance, and then we go for the next leg lower. Okay, so right now the focus for me is where we close the week in relation to this critical zone, especially if we exhaust intraday into that level. I'll be looking for a possible resumptive move there. Here's what it looks like on the intraday chart. Here was our last update here on SB. Okay, there was that zone of resistance we were looking for earlier in the week. Bearish inval. We got into the zone of resistance, and while we probed above it yesterday, we closed right in it. We were right there. So like, we have to wait for some clarity. It needs to be a break above 70s, 60s. Again, the objective monthly open, not Mike Boutros' opinion, fact. You got slope resistance there, downtrend resistance there. That's sort of a big level. If we make it back below the weekly open, 69.25, that would be a break of the upslope for the near term. In that case, we're looking for that resumptive move near 67.70s. Questions on Aussie? A little frustrating, but we'll see how we clear out this 70-70 level. And interestingly enough, this hasn't been a corollary play with risk, as you oftentimes do see with Aussie. I didn't have it on the list here, but a quick look at Kiwi, very similar scenario. We've been talking about Kiwi being the preferred play actually since Monday. The NASDAQ pictures, here's NASDAQ. Weekly, daily, scalp. All right. Kiwi, the only thing I want to say about Kiwi is from the daily chart, it was a little bit more, or the weekly chart was a little bit more of a conviction trade because we came right off the 618 retracement of the 2020 advance, just lower as 2015 swing low, right? Nice zone with downtrend support. And this is just a parallel, guys. I don't like to get too liberal with it, but it's there as well. So it's one of those trades where if we're going to take Aussie versus Kiwi, I'd rather take Kiwi because Kiwi actually was coming off of a much more conviction, technical support zone. Here's what it looks like on the daily chart. Here's the chomp and the bounce off that. Big resistance as you get back into 65, essentially. 64, 65, is the monthly open, and that 618. Here's what it looks like on the intraday. And just focus on this. Really tight descending channel. 64.24, nice pivot. That's going to be your breakout zone. It's going to be your breakout zone. So keep an eye on that one as well. And that puts an interesting piece on Aussie Kiwi, which is coming into some big resistance. We have an outside day reversal candle already in the making. So again, that would suggest Kiwi strength versus Aussie strength is probably going to be the better play, and that's kind of the opinion we had earlier in the week. So it's good to sometimes see these corollary plays. By the way, this isn't just one big this is one big consolidation since the initial monthly run up. So if we do break to the downside, I do think there's a larger washout scenario here for Aussie Key. And if you look at this on the long-term charts, which is again was the first thing that draw our attention to it, it's where this thing is faltering. Right, look at that basic trend line off the highs from, what is that, 2015. What is that? Is that a single daily close above? But the exhaustive trade nonetheless. So some things to think about there on the Aussie and Kiwi stretch. Last but not least on my menu here is Sterling. What can we say about Sterling, right? We basically nailed the low. Okay, here was our last update on British pound. It was back on the 15th, and the basic premise of the trade was, well, guys, we're at support. We're at support. And not only did we have support on the 15th of the month, but price had made an outside daily reversal. right off the lows. So the May low we closed was 121.66. Tested that point for 2 days. Soon as we posted the outside reversal on the daily close, we highlighted this setup and said, look for a possible recovery in sterling. The first level of interest, it was 125 proper, essentially that 618 retracement right here. So again, here's the weekly chart, loving it, right? This is your first level to look for something. Here's the daily chart, loving it, right? There's 125, again, 618 retracement. Next level up is gonna be your objective monthly open. It's 2581, okay? And yeah, especially the hourlies, Ted. Look at this, loving it. Okay, so I was going to show you guys this today, but we're already turning again. But this is the 618 retracement. This is just your basic objective weekly open, essentially, and the lows from back here. Nice pivot zone. Wouldn't want to see anything below that if we are heading higher. So if you guys remember, I think it was earlier in the week, I showed you this, and I was telling you it's too, what's the word? It was like it was really sharp angle. I said it was way too acute, way too vertical to kind of like, but you know, if we amend that to basic slope support, or even if we just use that to the slope resistance guide, so something like this, highlights the same levels. I'm not going to work with this. Again, we're getting too liberal on this, and it gets, you're starting to chase rainbows, but for all intents and purposes, just highlighting the lows, go to basic slope. There's resistance, a break below this slope, that's your bullish inval level. You'd look for resumption in that case, but all things held constant, 2581, 2660. Right? This is all determinant on, again, the dollar getting tired and the dollar exhaustion trade sort of accelerating to the downside. So we're at 103 right now on DXY. Look for this move. Look for this possible inflection right into the open of the US session today, and especially into the European close. Okay. I'm just curious, Aurelian says, how long will we be able to access today's webinar prior to Webinar Plus? Just curious, somewhat important. Aurelian, I'll have this webinar up, as I usually do, in a couple hours, and it'll be up for the rest of this month and all of next month. Everything's staying the same. There's gonna be no new content after next week. He doesn't mean Webinar Plus, Ted. I think that was just a typo or type, but we'll put out a couple updates next week as need be. Guys, you're gonna start to see all this same material show up on Daily FX, so keep your hands on my Twitter handle. But the website should be up for the remainder of this month. After this month, you might lose like your login, but all the material will still be up. Okay? No, Ted, or Ty, there won't be any webinars here next week, just on Daily FX on Monday. All right, so that wraps up an era, my friends, of 8 years of awesome fun, awesome engagement. You guys have made this whole endeavor just such an awesome, humbling experience, and so much fun. Kept us on our toes, and you know, I hope to keep the engagement going moving forward on Daily FX and on the new platform that we're building out there. I hope to try to keep this content as updated as I can on Daily FX. So keep your eyes there. Again, it won't be all tidy and organized like it is here just yet, but they're working to build out something for us over on that side of things. So amen. I appreciate you as always, Aurelian, Steve, Ty, Ted. You guys have all been awesome. Best of luck trading. Watching to the end of the week. Thank you, Iman. It's not my levels, my friend. It's always been the market's levels, guys. I just help you identify them. So I don't want to take credit. It's I appreciate your comments so much, Iman. Says you help me trade perfectly. I try to keep you guys in the right direction, and I promise to always continue to do that, guys. Whatever forum you ever see me on, I'm not a storyteller. I'm not a headline clicker. I'm always going to tell you what I see, what I'm trading, and where I think the opportunities are. and I continue to make that commitment to you guys moving forward. So best of luck trading. Same to you, Aurelian. Take care and good luck. I'll be seeing you guys all on Monday morning as always. And best of luck trading at the end of the week. Um, watch the risk trade into the close of the week. I suspect before the end, we'll get some sort of washout for the downside, whether it's a larger recovery, whether it's the spike. The bearish sentiment is building a little bit too much to my liking. So I think you want to be a little bit cautious heading to the end of the week, and we'll pick things up on Monday. Again, guys, thanks for an awesome 8 years. See you then. Cheers.